So when we have to audit whether the going concern assumption is appropriate, we need to provide substantive procedures. Now remember, they have prepared their financials according to the going concern assumption, and we need to make sure that we are comfortable that that is the correct assumption. And what are we saying? It's an assumption about the 12 months in the future. And so what would they use to predict whether they would be able to continue in that manner? They would have budgets, forecasts. And so for us, that's what we want to do. We want to go and get their cash flow projections, their budgets, their forecasts, and we want to analyze that and discuss it with management. How do we analyze it? We need to go and see, is it reasonable? And to do reasonableness testing, we do analytical procedures. Remember when we did subsequent events? These were things that were happening after year end, which is the same thing when we're looking at an assessment about the going concern, whether they will be able to continue for 12 months after year end. So what were other documents we could look at to help us see, do I think that after year end they are going to be able to continue? What documents do they have after year end, as well, in addition to budgets or cash flows? Interim financial statements. Or you could even just say their interim accounting records. Because this is what they've got, this is what they're recording as happening in the new period, but that new period is in this 12-month estimate. So looking at the actual results in an interim period could give us some indication about whether their assessment is reasonable or not. And once again, maybe even doing this comparison. Their assessment or their assumption versus actual in terms of your analytical procedure. Actual to date. Okay, where they have got loans or intend to issue shares, by looking at the agreements to see if they can actually extend their repayment terms. Okay, inspecting minutes of meetings, specifically post-year end, because that's going to give us an indication after year end, what's happening in this business. Do I think they will be able to continue? Inquire. Who would I inquire with? The obvious one is to always inquire with management about their future. Confirming financial support with third parties, so getting external confirmations with the people that they have got loans with. Performing subsequent event testing to identify if there are any going concern issues. So remember, in our identification procedures for period 1, seeing if there's anything there that could indicate going concern issues. Reviewing reports of regulatory actions, because this could mean there could be pending litigations, which once again means there's an indicator that they might have concerns with concerns with being a going concern, or the assumption. And if we're talking about litigations, inquiry then with legal counsel, or even getting external confirmations with the attorneys or legal counsel. And any analytical procedures that are going to help us to test the reasonability of the information above. Think about it, guys. What is the indicators that there could be issues with the going concern. If we come up to them, it's the liability position. So you want to be going and checking that liability position, so getting external confirmations. It's the key ratios. So comparing, doing analyticals with ratios to kind of see whether I think there are serious doubts. It's potential label difficulties. So comparing what's happened in prior years, maybe give me an indication of label difficulties they will experience in the current year. And then to also now see if there are any positives. I want to then go and see and audit their plans. Test it. How are they intending to dispose of? Is there a contract already? Do they have potential customers or suppliers on hand? So what I'm saying is use your indicators of going concern issues and of mitigating factors to help you provide additional procedures. What is a mitigating factor? They could have a plan. Go and test that plan. Ask management for the plan. Test the plan. Where are they getting these assumptions from? Because they've used previous trends. Okay, let me go back to prior year to see if those trends really are reasonable or not. Okay, but these procedures as they stand are in the actual standard. So you don't have to think them up. But there's logic to it, because it's all about an assessment post-year end. How do they make that assessment post-year end? Okay, and then finally, we've got discuss the impact of the use of the going concern assumption on the audit report and the actions taken by the auditor. And I've given you these paragraphs 17 to 24. Guys, I want you to put an NB over here, because this is the way it is most likely to be tested. Okay, where they've given you some information about concerns with the going concern, and they want you to now come up with the opinion. It's a step-by-step process. There are lots of marks, generally about 10 marks for this, so you cannot just conclude. SAPs have given a decision tree to help you follow that, follow a process, but you still need to write down the steps that you follow in order to get to your conclusion. Okay, so the first thing we need to do and state is consider whether the going concern assumption is appropriate. We have to make that consideration, so we have to state this. We aren't going to conclude just yet. We're saying, before I do anything, I need to do this. Then, once I'm comfortable that it is, I need to then evaluate whether there is a material uncertainty, because maybe the assumption about using going concern in the future is correct, but there could be some doubt, which would be your material uncertainty. And so in the consideration of that, I need to consider if there are any events that may cast doubt on the ability to continue. And so once again, that is another step I need to write. I need to put that down to show the marker that I'm going through a step-by-step process before I can get to some sort of a conclusion. Okay, again I need to add, consider where there may be a going concern if business rescue is a success. Guys, this point is only going to be applicable if they have mentioned business rescue. The reason why I've included it is because they most commonly do mention that they might need to apply for business rescue. So if they don't mention it, then don't include this, but it's likely that it will be mentioned. Then, if it's not successful, once again, are they going to be a going concern? We then need to look at whether there are any subsequent events, and again I put this point down. Consider whether there are subsequent events and what their impact will be. And then I need to provide my different opinions, assuming one of each of the options. So I need to say, based on this assessment above here, number one, this is because I've said options 1 and options 2, so that's number 1 and this is option 2. If the going concern is appropriate, but there's a material uncertainty, I have to then give each alternative. Is there adequate disclosure, inadequate disclosure, or no disclosure? What's my opinion? And then, however, if initially we said consider whether the going concern is appropriate and we conclude it's inappropriate, then I need to discuss under each of those. Did they prepare it on the going concern basis? Then what opinion? Did they prepare it on an alternative basis? Then what opinion? So ultimately, guys, when I'm doing this assessment, I need to have at least 3 to 4 alternatives, because I need to say, is going concern appropriate? Yes. Is there material uncertainty? Yes. Did they disclose, and what would my opinions be if they did disclose or didn't disclose? And then I need to give the option that maybe going concern is not appropriate. And what basis did they then prepare? So I will never have the answer here when I'm doing this. I will have to give different alternatives if they do certain things. Okay, so let's go and have a look at the different opinions based on the different alternatives. The going concern assumption is appropriate. We do believe they'll be able to continue, but there are or is a material uncertainty. So there's something that potentially an event that could render them no longer a going concern. But the outcome of that is still lingering at this point. So if there's this material uncertainty and they have disclosed it, adequate disclosure means I'm going to give an unqualified opinion. And included in this unqualified opinion is a new paragraph that is in the revised going concern standard, which is to add a material uncertainty paragraph. So I give an unqualified opinion. I'm happy that the financials are free from material misstatements. It must be prepared on the going concern basis. However, there is disclosure that I want the users to be aware of, and so I'm going to add a specific paragraph to my opinion which just highlights that that disclosure was made, and that disclosure is that there is a potential event that could come about that could affect their ability to continue as a going concern. If, however, they don't disclose, then what we have is a material misstatement, because they should have disclosed this material uncertainty, and therefore we will give a qualified opinion. So now we can see that a qualified opinion is where there is a material misstatement. But if they don't disclose anything, so it's not even inadequate disclosure, there's no disclosure whatsoever about this material uncertainty, then we've got a material misstatement that is pervasive and therefore I'm going to give an adverse opinion. I don't have to add in this material uncertainty paragraph because I'm not highlighting disclosure that they've made. They didn't make the disclosure, and so I give a full-on adverse opinion. Okay, next. And guys, again, all of these opinions we are going to discuss next week. And then they will make sense to you. And you can always go and give the necessary opinion or not. If the going concern is not appropriate, it's inappropriate, they shouldn't prepare it. And they prepare on the going concern basis. This should say going concern basis. Then the financials are wrong. There's a material misstatement. That is pervasive. And therefore, what do I give? An adverse opinion. But if they prepare it on an alternative basis, like the liquidation basis, which is correct now to show that there aren't a going concern, then I'm going to give an unqualified opinion. Because the financials are not wrong. There's no misstatement. They've prepared it on the right basis, which says, hey, we're going to be liquidating. And in giving this, I will add an emphasis of matter. Paragraph. And what this does is it just emphasizes to the users that there was or there is something in the financials that they want them to be aware of, and that's just to remind them, hey guys, if you haven't actually noticed, these financials are on the liquidation basis. Okay, so just something additionally to draw the user's attention to the basis, which they might have completely misread or seen, and so we want them to be aware. If management won't make the going concern assumption or assessment, and we want them to make that assessment, remember we said this is a limitation of scope. And if they limit my scope, that means I can't get the information I need. I can't get the evidence. Now I need to consider, as a result of me not getting the evidence, am I saying that there could be material misstatements? Just material misstatements, or am I saying there could be material misstatements that are pervasive? But note here, I'm saying that I can't get the evidence, and therefore there could be a material misstatement that is pervasive, not that there is, and so now I'm going to give a disclaimer of an opinion. The difference here, it could be, here it is, that's why here it's an adverse opinion, and here it is a disclaimer. Disclaimer is just saying I can't get the evidence, and so I have to just go with maybe or maybe not. And where there's a situation where there are multiple uncertainties, material uncertainties, not like in this first situation where there is only one material uncertainty. There are lots of material uncertainties. Therefore, there's a big concern whether they will be able to continue. If all of these uncertainties unravel in a certain way, they can't continue. So if that's the case, then I don't know if they can be a going concern. And so once again, I have to give a disclaimer. Because there could be material misstatements that are pervasive. And as a result, I give a disclaimer. Okay, what are the actions we need to take based on the above? We've got to consider if there is any reckless trading where there current liabilities exceed their current assets, and or if there's intention to defraud customers or creditors, and in which case we would then have a breach of the Companies Act, which could then be a reportable irregularity, and we would have to report it to IRBA in terms of the Auditing Profession Act. Okay, think about if there is any potential reportable irregularity as a result of the going concern issue. And that's going concern. Let's go and have a look at the standard.